All right, my next guest says that it's time, it's a great time, rather, to remember, investors, remember that the stock market mostly goes up year after year. I'm going to bring in Main Street Asset Management Chief Investment Officer Aaron Gibbs. And Aaron, we got a table here. You sent this table in. You don't know, but I've already got my January 2nd note ready for my clients, and I'm populating some things. This is the table I was going to start with. So when you see it floating around, don't think I copied you, okay?
No.
All right, so here we got. Since 1957, we've got a total of 15 years that we're down.
Right.
That's it. Out of that, like 22% of the time down.
Yeah.
The rest of the time, we're higher. When you use this, what are you trying to say? That be opportunistic in these times, or just stay the course, or both?
Stay the course. And you can see, look, this is not what we'd say a normal distribution. We've got 50% here and 50% on the other side. Like, this is a winning strategy where you've got a lot more years on the upside.
So you only got walloped once, down 45%. Yeah. In the meantime, up potentially 45%, 10 times versus one. Yeah. That's a hell of a chance. That's pretty good odds.
Yeah, and so I would say the one thing is, though, since we've got 2023 year-to-date so high up there, so that's twice the average, almost twice the annual return. So we might not expect such a great year going into 2024, but we still have a much better chance of it being up than it being down.
Right.
And so, again, staying the course in the market. And we, we'll see if it's definitely going to be a record-breaking year no matter what we do, or, the next 6 days.
You know, what's interesting to me is that, people watch financial TV, right? And they hear go away in May, and I just sold this stock yesterday, I made 10%, whatever. I mean, the message they get all the time, honestly, is to find a way to get out of this thing. So I'm glad that you've come in here and say, hey, let's stay the course. The question, of course, is what composes these rallies, right? So this year we're seeing where this is mostly a valuation-driven rally, right? This blue part, we know that can't always hold up.
No.
So if we're going to rally next year, will it come from earnings? Because there's a lot of skeptics out there that don't believe earnings are going to be enough to keep this market up.
Right, and that's the concern, and I think that's why I'm caveating that next year might be maybe just a single-digit year, because if we can get those earnings, right now earnings expectations are about 9%. So if we can get those earnings 8 or 9%, that's certainly, even if we see a little valuation compression, that means, maybe the market's up 5%.
Right.
Look, if inflation is down at 2%, we're still ahead of the game, right? You're still out there. So, yeah, don't expect another 20-plus year, but certainly in the positive, beating the inflation rate.
Let's talk about a couple ideas you've got. I want to share them before you go. We got a minute to go. One is KB Homes. The home builders have been absolutely phenomenal. I mean, this thing broke out here pretty big. It cleared these key moving averages a while back. It looks a little bit overbought short term, but longer term, where do you see this going?
I would say probably maybe in the 70s. Look, I've been really stressing about rotation, getting into small and mid caps, and home builders is one of those areas where they do benefit from lower interest rates, and these are smaller companies, so not your names that you nest like.
This one I've never heard of before.
Yes.
WTFC.
Wintrust Financial.
Yeah.
So it's a regional bank, another company that can really benefit from lowered interest rates. Obviously, it's hitting some resistance right now, but I think this is another one where you're getting in really low valuations. All we have to do is see one cut rate, and these type of companies, these regional banks, are really going to benefit, and you should see that valuation, because though we've had that valuation expansion in the large caps, we haven't had that in the small and mid caps. So I think you've got a lot of safer bets, and just be you can either just buy the entire index or be very selective.
And the bottom line, too, is the risk reward has changed a lot.
Exactly.
You want to be in these names.
So I like being in the smaller mid caps, because I just see a higher reward to risk on those type of names.
All right, good stuff. Stay right there for a second. I want to remind everyone, hosting Becoming Unbreakable. This is a town hall on Thursday, January 18th at 2 p.m. Eastern. I'm going to break down real-life consequences from past elections, also blow away some myths. The bottom line is you want to be in this market, but who wins in November will dictate maybe where you want to be, right? Because you don't want to be in EVs this year. Here's the best part of all of this, folks. Come join me in the studio right here in New York City. Go to eventbrite.com. What you do is you search for Charles Payne. The ticket is free, standing room only, the last 2 ones. By the way, I'll bring some books and sign them for you. It's going to be a hell of a party. I want to see you here.